Hey, good morning, everybody. It's Brian. It's 17th of September. Gonna have a quick live update. I'm gonna give you really quick. I've got some voice issues today, so I can't really talk. So we're just gonna get through this as quick as we can. Give you the numbers, give you the updates, so you see what we're looking at, and then we'll go from there. First off, on the news, there's really no news coming up today that we need to worry about. Everything's pretty clear sailing here as far as this goes for the news. No high impact reports coming up for the day, so that means there's nothing that we need to stop or step out of the market for. On the forex side of things, what we're watching for here is the same thing we're always watching for, looking for divergence and looking to see which currencies are moving. And that's what we would pair together with one another. So today the currencies that are really moving, which is the pound, is our big mover for the day. USD has been weak throughout the session so far, but looking over here, most of our pound cross pairs aren't great for trading. As a matter of fact, looking across here and just looking at where we are coming into the U.S. session versus the ranges, there's only a couple that really stand out that we could potentially be trading. The euro versus the CAD, which if we look over here, is been trading pretty much right with one another. The euro and the CAD have been basically in lockstep. There's really no divergence, which is why it hasn't moved as much as it would typically move. So the euro versus the CAD could be interesting. If we get a little pop, if the euro starts to move lower, that could certainly be an opportunity to pair the euro against the CAD, trade in the direction of the intraday trend, and take advantage of the situation where we may be able to pull out that quick 20 or so pips on a quick breakout move to the downside. It would be in the direction that we've got our volume detail indicating that we've got selling volume over buying volume, as well as the intraday trend being down. And then with that momentum, if we get that push lower on the euro, that would be the opportunity to trade that one. So the euro versus the CAD is one that stands out as potential opportunity. Maybe the euro yen, but that would be it. Everything else, when we look across here, just it's already moved the majority or more of what its typical range would be. So take that what you will. If nothing happens, if we don't really see that breakout where we see the euro moving to strength, just suddenly starting to sell off, or conversely starting to buy, giving us a burst of divergence from one of these other currencies, then then just don't do anything, right? I say it all the time. You don't have to do anything. It's called capital preservation. It's a good idea. If your rules aren't met, don't trade. All right. Let's look at the futures market real quickly, and then we'll wrap it up and let you guys get on with your day. The throat's killing me. The S&P, we're in a short bias. So looking at the 4 hour, we're still looking to go short here. I mentioned this yesterday. When I look at bias, I don't care about what the lines are doing or the fact that they're converging or strongly diverging from one another. It's irrelevant to me. It's black and white. Is the green above the red? Is the green below the red? That tells me if we're long or short. And currently we're still looking short. The green is below the red. We had a big sell-off after the news event yesterday, the FOMC events yesterday. So we're looking short on the 4 hour. We go to the 30-minute, and we're looking short as well. How can we trade that? A couple of ways we can trade it. We're currently sitting at a key level here at 33.35, this 33.40 area. If we stay below that after the open, you could look, maybe it pulls back a little bit. If it does, I don't know if it will or not. I mean, if it does, if it pulls back up, above this 340. Look at 335 as a selling opportunity if we break below that. If it stays below here and it pushes down even further as it comes into the U.S. session, if it's below there, you might look to have a retrace back up to 3040, 3050, and then sell off of that. That would be just selling breakouts on key levels or selling on key levels. Pull back to 3360 would be a bounce area. Looking to sell off of that. The other way to go is the way that we talk about, which is the method that we have the indicator set up for. And that's just simply letting the market dictate what we're going to do, given the fact that we've got short, the short bias on both of these. And then we would wait for the market to start showing us higher lows and higher highs. And as that occurs, during regular trading hours, when we've actually got volume, I talked about that yesterday, you need to have, for anything that we're trading, we need to have some volume and volatility behind it. Don't try to trade in off hours. Trade during times that you've actually got market participants. So anyway, during regular trading hours, look for price to start making higher lows and higher highs, and then trail our entry to the short side off the bottom of that previously closed lower high. And that would signal us in. If it just keeps, let's say it just starts pulling back and it rallies today, that would keep us out of the market too, because it would never come back to break us down through that other level. But we want to look at short opportunities. If we're trading with the bias, we'd be trading short. The bias is short on both the 30-minute and the 4-hour. On crude, we've got a mixed bias, so we don't want to do anything on crude. The 4 hour is long, the 4 hour is short, 30-minute is long. With the S&P continues to sell off, and there's some projection of lower sales and things. Just kind of looking across the board of what might be happening, and recovery's not quite as strong as we might be thinking. We could see oil start to reverse back on us again. But for right now, they're mixed. We have a mixed bias that tells us don't do anything. Don't do anything. You don't have to do anything. Your biases are mixed. Let it confirm the direction before you take trades. So for crude, don't do anything. For gold, now we've got a mixed bias again here as well. So for gold, don't do anything. We're sitting here with a long bias on the 4 hour. We have a short bias here on the 30-minute. So those are mixed biases that says, hey, keep your hands off, don't do anything. Let the market figure out what it wants to do, and then trade with it, right? We want to just be taking a ride. If the elephant's moving in a certain direction, we want to jump on its back and go for the ride. The elephant's acting crazy and is pacing back and forth and doesn't know which direction it's going to go. We don't want to try to jump on its back because we might get trampled, right? It's that simple. Just use that analogy. All right, so I'm going to wrap it up here, let you guys go. Have a great trading day, and we'll talk to you soon. Bye.